everybody, Luke Gromen, FFTT, for two things that grabbed my attention this week. Big weekend. You had Tiger Woods scoring a big victory at the Masters for the old guys, if you will, which was great to see him fight back from adversity. And obviously tonight, for those that are fans, the Game of Thrones is coming back for the season 8. Final season. Mrs. FFTT is a big Jon Snow fan, and so she's certainly excited to see it. I'd appreciate if you ever meet her, not mentioning that she's married to someone whose haircut has a lot more in common with Varys than with Jon Snow, but we'll keep that between ourselves. So I did want to highlight, in keeping with the Game of Thrones season 8, I think there is an interesting analog here to the season 5, where Jon Snow has to decide whether to allow the sworn enemy, the wildlings, through the wall to help, basically enlist their help to fight a common enemy, the White Walkers, or let their sworn enemy be killed by the White Walkers north of the wall. In a similar fashion, the U.S. faces a similar decision regarding the structure of the dollar's reserve status. If it is not changed, if the structure is not changed to a neutral reserve asset, then it's going to set up a situation where China and other adversaries can continue to use the dollar against the dollar's current structure against the U.S. And so for more details on exactly why that is, how it's structured, and what that means, I'd strongly encourage you to go find the article Diagnosing Your Own Dutch Disease in FT Alphaville from about 3 weeks ago. U.S. Dutch disease, U.S. dollar Dutch disease. If you search for it in Google, it'll come up. Very important read. So with that, we're going to jump into the two things. First off, it seems like a long dollar, the long dollar position is now effectively a bet on a chaotic breakdown of the trade deal. So we've been speculating for a number of weeks, couple of months, that there was a currency component to the trade deal. Last week, Secretary of the Treasury Mnuchin came out and openly confirmed that. And the latest headline, we tweeted about today, that the U.S. is open to facing penalties in a China trade deal, is something Mnuchin said. We keep coming back to the same thing, which is the dollar is a purview of Treasury. And Mnuchin's been intimately involved in these negotiations all along. He's openly saying that there's a currency component. The U.S. wants more balanced trade, and that can't happen over the back of a stronger dollar within this. And so at a time when much of the macro world is significantly and confidently long dollars, short euro against it in a lot of times, certainly vis-a-vis the Dixie Index, it just seems like there's an immense amount of headline political risk to a trade deal that we continue to think will weaken the dollar. So that's the first thing, is this this sort of dichotomy between the Treasury openly talking about a currency component relative to the mechanics of why the dollar squeeze should otherwise continue to happen, and how people are positioned for the short squeeze, but not the possibility of a big trade deal that adjusts the currency. The second thing here is the Saudi Energy Ministry issued a statement this week denying that it had threatened to drop oil pricing in dollars. Wanted to talk about this quickly because we brought it up last week. My first thought was never believe anything until it's officially denied, which this was as official as they come in terms of denials. But we keep coming back to one thing on this, which is that China signed a deal with Saudi late last year where China increased their purchases of Saudi oil by 50, 60, 70% for 2019, and they displaced Russia as their number one supplier. And if Saudi is still selling oil only in dollars, such a move would put China into a increased risk of a current account deficit or balance of payments problem that many of the yuan, big outspoken yuan bears have warned about. And it would suggest that China is either stupid or foolish, or China has an understanding with Saudi that pricing in yuan is either on the come or already kind of happening. So ultimately, I don't spend a whole lot of time. They said it, they denied it. I think when you look at the facts on the ground, the world is still moving in that direction, and we've continued to have heard that. So I'm going to jump into a couple questions here before we sign off for the night. From Michael: if a strong dollar empowers the U.S. consumer and a weak dollar empowers the rest of world consumer, thoughts on how significant that is for commodity demand? for me, the strong dollar doesn't really empower the U.S. consumer anymore the way it used to. In the world that existed 15 years ago, it did. But now, that world was when emerging markets were a tiny percentage of revenues for U.S. multinational companies, tiny percentage of revenues, tiny percentage of profits. That's not true anymore. And so because emerging markets have become such a big portion of revenues, big portion of profits, big portion of growth for U.S. multinationals, you can see this bear out. When the dollar strengthens, these companies' revenues and profits fall. They start looking to fire people, not hire people. And so there's been this baton pass where people are just blindly saying strong dollar is good for the U.S. consumer. It's not. And so I think ultimately, if the dollar weakens, you get sort of a double benefit, both from stronger EM demand for consumer goods, commodities, etc. You get the dollar aspect to the commodity side, and so I think I ultimately think that the strong dollar really is not benefiting. It's really not helping anybody at this point in time, save a pretty small sliver of special interests around Washington. Second question is from Doug. When and how do you see the announcement of a U.S.-China deal? I have no insights on how and when we might see such a deal announced. I have been interested to watch how the dollar, the yuan, and gold have been trading over the past 6 to 8 weeks. The dollar has not been allowed to fall below 96.50. It's not been allowed to rise above 97.50. The yuan volatility has been very low. Gold volatility has been at all near our all-time lows. So if there's a currency component, you'd expect to see it manifest in all three of those: yuan, dollar, gold. And it's almost like they're being held in place until a decision. And that sounds, I understand, conspiratorial. So I'm just noticing how they're trading. They're trading like they're in a very, very tight range, waiting for something to happen. That might be a better way of saying that. So rather than them being held in that place, but that is, I guess, I have no insight on when and how, but I am noticing in markets it seems like there are some important currency markets trading in very narrow ranges on very low vol. And then the last question we're going to jump into tonight. What is from Al? What's your thought relative to the euro in case of a currency agreement between China and the U.S.? Our thought is that if a deal's done and it weakens the dollar versus yuan, as we think is going to happen, I'd expect the euro to rise against the dollar, and perhaps sharply, which is really interesting because there was an article last week we retweeted from the FT that bets against the euro are at the highest levels in 3 years. So again, that's a very binary, very political risk. If you're an institution and you've got good Washington analysts / relationships, I'd be leveraging those tremendously right now, just trying to get a sense of that, because to me, that is the key question in markets is A, what's this deal and what's it look like and when's it going to get done? Because to me, there's just such a big FX component to it implied. So I'm going to jump from there. I will talk with you guys soon. In the meantime, if you want to see what we're up to, check out FFTT-LLC.com. You can check out information on our tree rings product there. We're getting great feedback about that we publish every Friday. So if you're interested, check it out. Otherwise, look forward to talking to you all again next Sunday night. Take care, everybody.